Hey guys, what's going on? So again come up with a new video, and this time we will discuss about how much input tax credit which you should reverse under rule number 42. So suppose you are in a business and you effect both the taxable as well as the exempted supply of goods or services. So the question is, you receive the input or input services which is applied for both taxable as well as the exempted supply, or you receive the input or input services which is applied for both non-business activity and as well as the business activity. So now the question is whether you should claim the input tax credit in respect of the input or input service used for effecting exempted supply as well as those which are non-business in nature. So suppose you receive the input tax credit, you receive the input tax credit in respect of the input or input services. So now you are using that input or input service for exempted supply. So whether you should take it, or you receive the input tax credit in respect of the input or input services which is used for non-business purpose. So whether you should claim or take the input tax credit in respect of those. So morally you should not take the input tax credit in respect of the input or input services which is used for effecting the exempted supply as well as for non-business purposes. So you should not take such kind of input tax credit, and same is in line with section number 17 subsection 1, 17 subsection 2. So 17 subsection 1 and 2 says that if you are in a business where you receive the input or input services and you are using that input or input services partially for non-business purposes and partially for business purposes, then the input tax credit which is attributable for the non-business purpose should be reversed. And similarly, input or input services used or effecting the exempted supply should also be reversed, or you should not take the input tax credit in respect of those. So that is section number 17 and 17 subsection 1, 17 subsection 2. But there is also rule which is rule number 42 which discuss about the reversal of input tax credit which is used commonly, which is input tax credit which is common for both non-business purpose and business purposes, and also for effecting the taxable supply as well as non-taxable supply. So what exactly will be the example? The example would be like the audit fees. So audit fees is common for both exempted as well as the taxable supply, and also like the consultancy fees, just like the GST consultancy fees. So you are in a business in which you are effecting both the taxable as well as the exempted supply, and you are taking the consultancy fees from a GST consultant like me about the GST. So you know that the GST consultant will give the advice to you on respect of both exempted as well as the taxable supply. Now the question is how to reverse the input tax credit in respect of those which is applied for exempted supply as well as for the non-business purposes. So that is the question. So that is provided under rule number 42 of the input tax credit rule. So before to take into account, or before to know that how you can calculate the input tax credit in respect to the input which is commonly used for both affecting the taxable as well as the exempted supply, we should first understand how many type of input tax credit is really are. So input tax credit, we can divide the input tax credit into the 5 segment, you can say. First one, input tax credit in respect of inputs or input services used for non-business purposes, and then input tax credit in respect of input or input services used for effecting the exempted supply, and then input which is restricted or which is prohibited in under section 17 subsection 5. So input tax credit in respect of certain inputs or input services is prohibited under section 17 subsection 5, like the motor vehicle or the food beverage or the works contract services, so that are prohibited. And then input tax credit in respect of input or input services which is used for exclusively for business as well as for the taxable supply. And the last one, that input tax credit in respect of input or input services which is common for business as well as non-business purposes, or common for affecting the exempted as well as the taxable supply. So that are the five major type of input tax credit, which is like exclusively for non-business purposes, exclusively for exempted, exclusively which is prohibited under section 17(5), exclusively for business plus taxable activity, and then last one which is common for both business as well as non-business, or exempted as well as exempted plus taxable supply. So these four category can be easily identified because non-business activity like the input or input service used for non-business purposes, exclusively used for non-business purpose, can be easily identified. Similarly, input or input services which is exclusively for exempted services or goods can be easily identified. This one can also be easily identified. This one exclusively used for business purpose as well as for affecting the taxable supply can also be easily identifiable. But what about the common input tax credit which is used for both exempted as well as taxable? So how to calculate it? That is a challenge. So therefore, the rule 42 provide for the calculation of this one which is common, like the audit fees or the GST consultant fees. So how to calculate it? So we can calculate it by using the formula which is itself prescribed in rule number 42. So like suppose total input tax credit, like the figure is T. Suppose the amount is T. The total input tax credit is T, and then we can give the T1 for the input tax credit in respect of input used for non-business purposes, then T2 for exempted inputs or input services, then T3 for prohibited input tax credit, then T4 for input or input services used for business as well as for the taxable supply. And then if we know that total input tax credit is T, and then for non-business purposes, exempted, prohibited and business plus taxable is T1, T2, T3, T4, then the common input tax credit can be calculated by using the formula T minus T1, T2, T3, T4. T minus T1, T2, T3, T4, and we can give any term. So we can give the term like the C2. So suppose that amount T total input tax credit minus all those four input tax credit, we are giving it a number, we are giving it a random some kind of a name. So the name is like C2, and C2 is itself given in rule number 42. But the C2 has the three different component now. C2 which is common. Now that has the three different component. First component is the input ITC, input tax credit in respect of input or input services used for exempted supply, and then input or input services used for non-business purposes, and then input used for business as well as the taxable supply. So that common input tax credit also have the three component. First one is affecting the exempted supply, second one non-exempted non-business purposes, and then third one for business as well as for taxable purposes. So how to calculate the amount of common input tax credit for exempted supply? So that is the formula which is given under rule number 42. So we can calculate the input tax credit, common input tax credit for the exempted supply is like this: C2, which is the amount which is the common input tax credit, C2 divided by total turnover in the relevant tax period multiplied by exempted turnover in that particular tax period. So when you calculate like C2, which is the common input tax credit, divided by total turnover multiplied by exempted turnover, then you will find the figure of input tax credit, common input tax credit used for effecting the exempted supply. So we can give the term as D1. And then input tax credit, common input tax credit used for effecting the or using the non-business purposes. So the 5% of the C2, the 5% of the C2 is a deemed figure which is also given in rule number 42. So we can call it as a D2. So the D1 and D2, D1 is C2, which is the common input tax credit divided by total turnover multiplied by exempted turnover. So we can find it a figure which will be called a D1, and then 5% of the common input tax credit is the deeming figure for non-business purposes, input tax credit used for non-business purposes, and that will be called as a D2. So now common input tax credit, which is for three components, which is for three purposes. First one for affecting taxable, first one is affecting for exempted supply, then for non-business purposes, and then for business plus taxable service taxable purposes. So we can calculate that business plus taxable purposes is like C2, which is common input tax credit, minus D1 minus D2. So that's how we can calculate the three component. So the first two component, like the exempted as well as for the non-business purposes, will be a figure which will, like the D1 and D2 will be the figure for the input tax credit which is required to be reversed under rule number 42. So that's how you have to calculate the figure of common input tax credit, which is applied for three purposes. First one is for the exempted supply, and then for the non-business purposes, and then for the business plus taxable purposes. So that's how you have to calculate the common input tax credit. These four categories, like for exclusively for the exempted, exclusively for non-business purposes, exclusively for the prohibited item, and then exclusively for business as well as for taxable supplies, can be easily identified. But the common one has to given a formula, and the formula is like this, and you have to calculate it like this. So this figure is called the input tax credit, which is required to be at the reverse as per rule number 42. And now we know that this type of thing, like input tax credit in respect of exempted, and then the exempted, then the non-business purposes, and then the prohibited item, and then the business plus taxable, and then the common input tax credit. We know everything. But now how to show it in the return, how to show it in the GSTR 1, 2 and 3, how to show it, that is also a major question. So that figure, the exempted plus non-business purposes item, which is required to be reversed as per rule number 42, is to be given under GSTR 2 table number 11 subtable A clause number C. So when you see the table number 11 subtable A clause number C, you will see that in that column you have to now give the figure of reversal of input tax credit, and that is under 42 rule number 42 sub rule number 1 clause number M. So you have to give the detail of this one, like common input tax credit for exempted supply plus common input tax credit for non-business purposes. So you have to add those two figures, D1 plus D2, for filling out the figure in table number 11 subtable A clause number C. And in regard to this one, like exclusively for non-business purposes, then exclusively for exempted, and then exclusively for prohibited item, how you have to show this into GSTR 2. So that's how you have to process. So suppose the supplier of those three goods will give the detail in GSTR 1, that will be auto populated into your GSTR 2A. So when you accept, reject or modify the GSTR 2A, then you have to now mention here, that how much input tax credit you are eligible for those invoices. So when you receive the invoices of for non-business purposes or for exempted supplies and then for prohibited item, you should fill nil. You should fill nil on the amount of input tax credit eligible. So when you fill the nil item, like nil input tax credit eligible, so that's how that is gonna process, like you will not take the input tax credit in respect of first three item, and that is also in line with section number 17 subsection number 2 or section 17 subsection number 3. That is regarding this one. And for this one, like for common one, you have to give the detail in 42 sub rule 1 M, and in table number 11 sub table A clause number C of GSTR 2. So when you fill the detail of 1, 2, T1, T2, 3, 3, and then the D1 and D2 into the GSTR 2, then you will end up using only the input tax credit in respect of the input or input service used for business as well as for taxable supply, and the common input tax credit in respect of input or input services used for effecting the business plus the taxable supply. So when you will fill the data in the GSTR2 as per this one, then you will end up using only the input tax credit in respect of business plus taxable exclusively, and then the common one which is used for business plus taxable activity. So that's how only the two figure exclusively for business plus taxable supplies and then common input tax credit in respect of business as well as taxable supply will be reflected into your return. So that's how it will process. You have to give the detail, you have to mention the amount of eligible ITC into table number 3 of GSTR 3. So that's how that will be reversed. And for this one there is a special table which is table number 11 subtable A clause number C. So that's how it's gonna process in GSTR 2. And with regard to GSTR 3B, which is for the return of this month, which is July month, there is also a table which is regarding the amount of input tax credit which is required to be reversed under rule number 42 and 43. So for this you have to only give the detail of D1 plus D2. Don't give the figure in that table regarding the T1, T2, T3. Remember that you don't have to fill the detail of T1, T2, T3 in that amount of input tax credit which is required to be reversal under rule number 42 and 43. Just give the figure of only this one, D1 and D2 in that table. Remember that. And that's how it's gonna process. And for just for your record, the date of filing the GSTR 3B has been extended to 25th August. Like the normal person who don't have any transitional input tax credit, they can file the return up to 25th August and then also pay the tax up to 25th August. And if those person who have the transitional input tax credit, they need to pay the tax on or before 25th August and then file their TAN 1 form and then file their GSTR 3B form up to 20th August 2017. So that's how this is also a thing. And there is also a rule which is rule number 43, which is for the amount of input tax credit which is required to be reversed in case of a capital goods which is used for exempted supply as well as taxable supply, or the input or the capital goods which is used for both non-business purposes as well as for the business purposes. So I will make a separate video for rule number 43, but the principle is just like the same. That's how it's gonna process. We will make a separate video regarding that. So I think I have said all the thing, and like the video, share the video, and comment on the comment section. If that will be cool, comment will be cool, and I will make separate video to give the answer to your comment. And you can also mail me your query regarding all of these or any of the provision of the GST on sharwangst.148@gmail.com, sharwangst.148@gmail.com. But subject to some condition, you have to pay some amount of money to the channel as your contribution to continue the channel so that it can be continued or the save. Alright guys, so we will meet again in the next video. Till then, bye bye.